All right, today is July 25th, Thursday. Taking a look at the major indexes here. We're starting off with the Nasdaq. It's been quite a sell-off since we hit this peak back here on the 10th of July. So we're down about 8.89% in the Nasdaq. We are sitting below the lower Bollinger Band, below the 50-day moving average, and sitting just above this 100-day moving average. The fact that we are below this Bollinger Band here, this lower Bollinger Band, that's two standard deviations. The Bollinger Bands are set two standard deviations from the stock price. So being below that tells me this selling is pretty extended to the downside, and I would be expecting a bounce sometime soon. Not saying that the market's going to turn at this point, but I'm just saying I do expect a bounce Thursday, Monday, some kind of time like that. Then taking a look at the RSI right here, the daily RSI on this chart is approaching oversold territory. Anything below 30 is inside the oversold territory. So once again, just another kind of technical indicator here showing that there is a lot of selling pressure and it might abate sometime in the future. Over here on this left chart, we've got the weekly chart set up. This just gives you a little bit view of a zoomed out time view of the last year and a half. And over here, we have the 130-minute chart. This is the intraday chart. Each three of these candlesticks makes up one trading day. So you can see here that we got some pretty significant gap downs when this market broke down here at the end of the 16th. And then when we came into the market on the 17th, we had this gap down. And then once again here at the end of the 23rd, we tried to show some strength. We came up above this 2-day moving average, but we're still under a declining 5-day moving average. And then when we opened up on the 24th, once again, we got another gap down, and we're still sitting below a declining 2-day moving average and a declining 5-day moving average. Hearing some chatter out there about people talking about buying the dip. My advice of caution, don't exactly remember what technical trader I got this from, but basically his saying is, don't catch the falling knife, pick up the knife off the floor. And I very wholeheartedly agree with that. At the very minimum, before you purchase anything here, trying to buy this dip, I would want to see this above this 5-day moving average. You don't want to be buying stocks long under a declining 5-day moving average. So that's just a quick look at the QQQ. Next up, we've got the S&P 500, the SPY. The SPY isn't selling off as much as the QQQ is. Taking a look here, we are down 4.68% off this peak. We're sitting just under the 50-day moving average, and we are also, I believe, we are just about 30 cents below, 40 cents below the lower Bollinger Band. So once again, the fact that we did close under this lower Bollinger Band is once again telling me that the selling pressure it's kind of nearing its exhaustion point on a shorter time frame. And then once again, if we take a look at the RSI here, the RSI is at 39 and it is approaching this lower 30 level, which would indicate that we're in oversold conditions. Very similar here, if we come and take a look at the 130-minute chart, this intraday chart on the right side here, closed under that lower Bollinger Band. And, you can see we've, just recently made new all-time highs. And you can see, our most recent corrections and sell-offs that we had came down to this 100-day moving average here. And then back here in October of 2023, we actually sliced under the 100-day moving average. And we also came under the 200-day moving average before we got our rebound here. So that's just, kind of a look at where we've been and where we can go. Next up, we have the Russell 2000. So this is where we're starting to see some divergence in the indexes, and this is actually bullish. So the Russell 2000 right here, this isn't at all-time highs. It's just below all-time highs, but it's holding up very well. As you can see, it's sitting above its 10-day moving average. It's sitting above its 20-day moving average. It's also sitting above its 5-day moving average here as well. So very bullish here. You can see it just got in this overbought territory. Anything on 70 in this RSI section is going to be in the overbought territory, and we're currently sitting at 63. So Russell 2000 is holding up pretty well, and I'll zoom out here to the monthly chart so you can see how we're just under this all-time high that was made back in 2021 in November. And so with that said, the Russell 2000 is made up of about 40% regional banks. So it is good to see that this market run-up is starting to broaden out to some of the other sectors outside of just big tech and infrastructure. Next up, we have the Dow Jones Industrial Average. Um, Once again, pretty strong here. Just recently made a new all-time high. We have since sold off then. The Dow Jones is 3.4% off its high. It's currently sitting above its 20-day moving average, also above the 50-day moving average, just under the 10-day moving average. So like I said, we are seeing a broadening out of this rally, and the Dow has been holding up pretty well. Earnings have been coming in mixed. Uh, Everything related to the AI build out remains strong, at least from the current earnings that I'm seeing come in for the quarter. Both semiconductors and data center companies, they're reporting robust earnings and they're giving positive guidance. So now we're going to flip over to some of the futures markets. So we got to look at Bitcoin here. Bitcoin is sitting just below its all-time high. It needs about an 11% move higher to crack this 74,000 level and make a new all-time high. So we'll keep a look on that. Bitcoin has just kind of been, since it made this high back here in March of this year, we've just kind of been, grinding sideways, kind of stuck in this range, anywhere from 50 to about 70,000. We've just been, grinding sideways. So we'll see if Bitcoin can thrust its way higher. As you can see here, this 50-day moving average, this solid red line, the 50-day moving average has flattened out and just moved sideways. And as you can see, the actual stock price is just trading above and below that 50-day moving average. So this looks like consolidation or accumulation to me. We're not going to know if it's consolidation or accumulation until after it makes the move. But this does look to me like either buyers or sellers are kind of bidding their time to make this either move up or down. Next up, we've got Ethereum or Ether. These are the Ether futures. So Ether is currently sitting about 52. It needs a 52% move higher to break this all-time high here of 4,902. So Ethereum not quite as bullish as Bitcoin is, but the chart still looks good on this long-term monthly chart. So we'll see where that goes. Next up, we've got gold. So gold has gotten caught up in the sell-off. Made a new high here at $2,488. And then since then, we are below this 50-day moving average here. And it also, very similar looking setup here and similar chart to the Bitcoin chart. As you can see, it looks like we're range bound, and the 50-day moving average here has turned sideways, and we're just kind of chopping above and below this. I would say that this is more above the 50-day with the chop. But we'll see where gold goes as well. A lot of strong central bank demand, buying gold to kind of diversify their central bank holdings away from just the US dollar. A lot of the BRICS, Brazil, Russia, India, China, South Africa, Iran, a lot of those countries are trying to essentially diversify their dollar holdings. They say they're going to get away from the dollar, but I highly doubt that. Good luck with that. The dollar is the world's global reserve currency for a reason. We have the most liquid stock market in the world, in addition to the most liquid treasury markets in the world as well. So good luck with their plan of getting away from the dollar. Next up, we've got copper. Copper's been under a significant correction after making this new all-time high here, $5.19. Since then, we've come all the way down to this 200-day moving average here, and keeping an eye on this. I do have faith in the copper trade long term. Looking at this longer term chart here of the copper futures, you can see that this is still, in my opinion, a pretty bullish setup. You have these Bollinger Bands here that are starting to narrow in, and we are trading within this channel here. So typically, if we can get this breakout, if we can break above these higher highs that were made back here in May of 2021, if we can break above this, this is just signaling to me that we've got a lot of coiled up, kind of pent up energy in this commodity here, and if we can break above, I am expecting a significant move higher in the copper market. And this is the 11-year moving average here, this blue line. As you can see, we've been holding steady above this as well. So we'll see where the copper markets go. All right, next up we've got the 10-year Treasury yield. All right, so with the 10-year Treasury yield here, we are just off this recent peak here of about 5%, like 4.99. So this is the recent peak that it made, and this is back in, excuse me, October of 2023. So that was the latest peak that we had in the Treasury market on the 10-year yield, and we can zoom this chart out a little bit so you can see kind of this peak that we made. The kind of last significant peak that I have in the 10-year Treasury market is back here in this 2006 through 2007 area. This is kind of where yields kind of topped out. They were slowly drifting lower throughout the late 90s. And then here we kind of got this peak right before the great financial crisis of 2008 with the real estate market. And then since then, rates just kind of went lower, lower, and lower. The pandemic happened, and we got these ultra low interest rates here that came down to about like 0.39%. So with that, there was nowhere for rates to go but up. I've heard some people, complaining that interest rates are high, expensive, blah, 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 et cetera. Interest rates, in my opinion, are not expensive at all. If you look at the long-term history of U.S. interest rates, we're actually on the very, very low side. With that said, the yield curve continues to be inverted. I'll actually pull up a chart of that right here. Here's what I'm looking for. All right, so as we can see here with the yield curve, the longer you're loaning money, like the longer duration, the higher interest rate you're usually expecting. But what we can see here is with this inversion, the 1 month rate is 5.49%, whereas the 30-year is 4.5%. So you can see this yield curve inversion, and it's across the board. And all the inversion is when the shorter term duration treasuries and bills are yielding more than the longer duration bonds. And so that's what we see going on, and it is predictive of a recession. I think it's something like, I want to say almost all of the last recessions have been predicted by an inverted yield curve, except for maybe 2 false signals. So it's a pretty reliable indicator. All right, moving on from that, we're going to take a look at the current. Actually, no, we're going to take a look at the sectors because there is sector rotation going on. So if you take a look on this watch list here to my right, I've got the ETFs by sector, and I've got this sorted by RSI. This is daily RSI on the left column, and this is monthly RSI on the right column. So this is going to be your shorter term RSI or relative strength index, and then on the right here we have our longer term relative strength index that's based on that monthly view. So first up, we've got KRE. This is going to be the SPDR Regional Banking ETF. This is not at all-time highs, but you can see here, looking at those other indexes that we were looking at, this is sitting well above its 10-day moving average and hasn't really sold off at all. And then if we flip over here and take a look at the longer-term monthly chart, you can see how much it is off of its all-time highs that were made back here in January of 2022. Next up, we have KBE. This is the SPDR Bank ETF. Very similar setup to the regional banks that we were looking at here. Not at all-time highs, but still holding up very well, sitting above that 10-day moving average. Next up, we've got the Biotech Index. So this is the iShares Biotechnology ETF. This has been on a recent, you could say, a pretty good run. And once again, we're seeing very good strength in the biotechs, not really selling off, sitting above this 10-day moving average. Meanwhile, if we look at the major indexes, the S&P 500 sitting below its 50-day, and the NASDAQ 100 is sitting just on its 100-day. All right, we've got the home builders. Home builders on absolute fire. This is one of the leading sectors right now. This sector has not sold off. This sector, like the other ones we just looked at, sitting above its 10-day moving average and sitting at all-time highs. Zoom out to the monthly chart so you can see those all-time highs. All right. Next up, we've got the telecom ETF. So if we take a look at this telecom, went a little too far there. If we take a look at this telecom ETF, you can see here we are well off the highs that were made back here in June of 2021. But on this daily basis, still pretty strong index, not selling off with the broader markets. This is the Vanguard Real Estate ETF. Once again, we're not seeing a lot of selling here. It's sitting just below its 10-day moving average, but it's sitting well above its 20-day. I'll give you a little longer view here of the monthly kind of all-time view of that chart. All right, we've got the VanEck Oil Services ETF. Oil Services sitting just above this 10-day moving average here, but this is a more choppy looking chart that I'm looking at. You can see it here in the daily. You can also see it here in this weekly chart, and we'll flip over to the long-term monthly chart. Oil services has been in a decline here for quite some time since these peaks back here in 2014. All right, we've got XLF. This is going to be the financial ETF. So these are going to be our financials. It did actually just make a new all-time high here, and we're sitting just below this 10-day moving average, but sitting above the 20-day moving average. All right, we've got utilities. So these are the utility stocks. The 50-day moving average has come up to the utility stocks here. We'll flip over to the monthly chart so you can take a longer term view of this. We're all-time high was $78 and we're sitting at $70 here. So with the utilities, there's a lot of money going in them due to the AI energy build out. We need a lot more energy for these AI data centers, along with electrification of EVs and heat pumps in buildings. So with all this electrification and onshoring of manufacturing, we just need a lot more of electricity. The utilities are benefiting from this, but I don't like utilities because they have a lot of regulation, and typically their profits are mandated and capped by the state government that manages that specific utility. So utilities, not my favorite way to play this. I prefer the electrical industrial players like Eaton. Eaton, they're supplying all of the equipment that you're going to need to build out these actual power producing facilities and these data centers to hook up to the grid. So long term, Eaton is my favorite play on the electrical industrial side. We've got the Energy Select ETF. So this is just more energy stocks. You're going to find a lot of oil stocks in here. We're sitting just below this all-time high here of 101, and this is made back in June of 2014. And as you can see, the 50-day moving average has come up to the stock, since declined a little bit. The ETF has also declined as well. We've got PAVE. This is the infrastructure ETF. The global U.S. infrastructure. Weird name to call it global U.S. infrastructure, but whatever. And once again, you can see here we're sitting just above this 50-day moving average here. Zoom out for this longer term chart, and you can see that this has kind of been on a tear. Basically, U.S. infrastructure, it's some of the oldest infrastructure in the developed world, and it is time to replace a lot of bridges, roads, electrical utility lines, et cetera, et cetera. So that is a look into that. Here we've got the Dow Jones Industrial Average. We already took a look at this. Next up, we've got it's another energy ETF, so it's going to be very similar to the one that we already looked at. This is the SPDR Consumer Staples ETF that we're looking at here, XLP. And if we take a look here at the longer term chart, you can see we're sitting just below this all-time high here of $81. And it looks like we're pushing against this upper Bollinger Band on the monthly chart. So if this breaks out, this might have room to run higher. And then we have XLI. This is going to be our SPDR Industrial ETF right here. Once again, you can see we made a new all-time high here and sitting just above this 50-day moving average. 50-day moving average is starting to flatten out, move sideways. So this is a good looking chart in my opinion here. This is going to be the SPDR Materials ETF. Similar setup to what we were just looking at with the industrials, but this is covering the materials industry. 50-day moving average is starting to kind of decline a little bit, flatten out, and we're sitting just under that 50-day moving average. This is going to be iClean. This is related to renewable energy stocks, and this is from iShares. This has been pretty bearish since this has come out. When it comes to the renewable energy stocks, like the actual solar cell producers and the solar panel manufacturers, I'm not a fan of them very much. And the reason is because it's very similar to semiconductors, where each year they get cheaper and cheaper, and they're essentially locked into a race to the bottom. But the company Enphase, they make the inverters that convert the electricity coming off the solar panel into from DC electricity into AC electricity, which is what homes and businesses use. Those inverters that they make is the basis for their solar system. So it's got smart apps. You can go in there, you can monitor exactly what the system's producing, what you're exporting to the grid, et cetera, et cetera. They have really good technology. I've worked in the solar sector for the last 3 years. Their technology is phenomenal. I'm a big fan of it. Really easy to work with and use. All right, here we have XME. This is going to be the metals and mining ETF. And we'll just flip over here to this long-term view. Metals and mining, like gold's ripping higher, but the gold miners aren't necessarily following in lockstep with gold. I think there's a lot of reasons for that. The cost of fuel in some of these countries where you have to mine, along with political instability in a lot of these countries where they're mining for gold. So I'm not the biggest fan of the metals mining. I prefer to play the direct commodity itself, like copper versus the miners. This is GDX. This is going to be our VanEck Gold Miners ETF. And like I was just saying, gold pushing all-time highs, but the miners are not following. We've got 10. This is going to be the solar ETF right here. So, looking at this longer term view, once again, you can see these solar stocks, just not it. Nothing I really want to be involved in. Great technology. It is what's currently coming onto the grid. But the actual stocks themselves, there's just a lot not to like about the business. We've got XOP here. This is the oil and gas exploration producers ETF. And once again, kind of looking at it like the oil services, very similar setup here. Nothing that would get me too excited. We've got the junior gold miners, very similar setup here as well, with the VanEck junior gold miners. Gold miners just not tracking the price of gold. All right, and as you can see here with this RSI that we're getting into, these are the absolute losers in the market. So right here we have the Russell 2000. This is going to include the 1,000 large cap stocks plus the 2,000 small cap stocks from the Russell 2000. So this is a very broad view of the market here, and it is positive and bullish that we did make this all-time high here. So it's not just big tap driving the market higher. We do have other companies participating as well. Next up, we have XLY. This is going to be the Consumer Discretionary Select ETF. We'll flip over here so you can get a longer-term view. Nothing in here that really excites me. All right, and then we've got the S&P 500. We've already taken a look at this. I'll just flip over here so we can get a zoomed out long view of that monthly chart. And we've got the semiconductors. So the semiconductors, they are below this 100-day moving average. They are leading the sell-off. The semiconductor earnings that have come in so far have been good. They've been bullish. The earnings has been robust growth, and the guidance has been raised higher. So I'm suspecting a lot of this is just profit taking going on in these AI plays that have had a lot of room to run up. All right, we've got QQQ, same, we already took a look at this earlier, same deal. Here's a very zoomed out long-term view so you can get an idea of what the QQQ has done. And then the last thing that we have to look at here is going to be the communication services ETF. As you can see here, it made a new all-time high. I'll flip over to the monthly chart so we can take a very zoomed out look at what this has been doing. But for me, it took since 2021 to make a new high here. Whereas if we compare this with like the NASDAQ, for instance, the NASDAQ has absolutely smoked, or I don't want to say smoked, but it's definitely increased a good bit from where it was in 2021. Whereas we're not seeing that same, we're not seeing that same kind of outperformance with the communication services. All right, so the next thing I'm going to do is I'm going to flip this over here to this longer term RSI, and we'll take a look. Looking at this long-term monthly RSI, you can see semiconductors are still the clear leaders in the marketplace, followed by the home builders. Just zooming out on these long-term monthly charts, that RSI reading that we're looking at on that watch list corresponds here to the RSI on this monthly chart. So these happen to be the leaders in the market, followed by the S&P 500, and then the Russell 3000, followed by the QQQ. So we are seeing a little bit of this long-term sector rotation here between the SPY, which has a relative strength index of 67 on this monthly basis, versus the QQQ, whose monthly RSI reading is at 65. So we're seeing just a little bit of a change here. But as I've been telling everybody, QQQs, if you're in an index, the QQQ is the benchmark. This is what you want to be in. You don't want to be in the S&P 500. There's 500 stocks in there. There's a lot of different areas outside of technology that you don't want to be exposed to, like utilities, for instance. I want nothing to do with that. I don't want anything to do with the banks. So stuff like that is where you're losing performance. And the NASDAQ 100 is the benchmark that I compare everything to. So if I'm looking to buy a stock, I'm comparing that stock to, has it outperformed the NASDAQ 100? If it has outperformed, then that's a stock I want to buy. If it has not outperformed, I'm better off just being in the index itself instead of that individual name. All right, with all of that said, next we're going to move over to earnings. All right, so I'm going to pull up this data table here, or not data table, this watch list. And then we're actually going to flip over here. All right, so taking a look at Q1 earnings, the leaders for Q1 earnings this year, without a doubt, was ARM Holdings, or excuse me, it's just ARM now. ARM, they make the chips for like the iPad, the iPhone. Apple, about I'm gonna say like 4 years ago, 5 years ago maybe, stopped using Intel chips for their PCs, laptops, and they switched over to ARM as well. So what we're seeing with ARM is kind of this shift from the Intel x86 chips onto this ARM architecture that is much better for energy efficiency and performance. So if you're looking at performance per watt, which actually starts to matter in a data center, if you have let's say 100,000 of these chips consuming electricity, that's a cost. You have to pay for electricity. So if you can get better and more efficient compute per watt, that's an advantage. And that's what we're seeing with ARM right now. Next up, we've got Sprouts Farmers Market. This is up 29% since they reported earnings in Q1. Sprouts Farmers Market has just been chugging higher and higher and higher. I love this stock until they missed on earnings. This is something that I like a lot. You can see that they beat revenue, beat earnings, raise their guidance. Monolithic Power, another great stock from Q1 earnings, along with Garmin. Interesting enough, Garmin they still make GPS devices, avionics for airplanes, navigation systems for boats, et cetera, et cetera. DR Horton here, home builder, they're up 18% since they reported earnings in Q1. NVIDIA was another 18% winner. ISRG, they went up 16% since they reported. Fabrinet, Arista Networks, 14%, 14.6%. ServiceNow was up 11 or is up 11% from when they reported. So just kind of giving you an example here of when these companies report earnings, the ones that are the big winners and they get those big moves right after they report, these are the stocks that I'm interested in. These are the stocks that are typically the market leaders. So taking a look over here, taking a look at earnings here for the current earnings. We'll start off with ServiceNow. ServiceNow, they're up 13%. They're the winner right now in this market. Their revenue came in 0.7% higher. Their earnings came in about 7.2% higher. So they did beat. And next up, we have DR Horton. DR Horton, they beat on both earnings and revenue, and their guidance was above consensus. Fastenal is a company that I need to dig in here. They actually missed on both revenue and earnings, but somehow the stock is up 7% while the broader index is selling off. So I feel like I need to go in there and see kind of what's going on with their stock. Intuitive Surgical here, they beat on both revenue and earnings. Pretty strong stock. If you're not familiar with what Intuitive Surgical does, they have some pretty cool Da Vinci robots that I've been following for probably, I don't know, over the past decade. So here's just an example of some of the robots that they make. And this video here that I'm playing is from, I believe this is from like 2014. It's from 13 years ago. So this is just what they can do with their laparoscopic robots that allows the surgeon to go in with minimally invasive surgery to conduct operations on patients, gives the patients faster recovery time, and it's, like I said, it's less invasive than actually cutting the patient open. Essentially what they do is they cut open a small port through the skin, and then these instruments are able to go through that port, and they're able to conduct surgery. That's the surgeon over there operating the robot, and they're able to conduct laparoscopic surgery. All right, let's see, Intuitive Surgical. Next up, we have Google. Google had mixed results. They beat on revenue. They missed. Their earnings beat the consensus estimate. So the consensus estimate was $1.85, but the whispered number on the street, so this is basically what hedge fund managers, et cetera, are thinking that they're going to do, kind of in private amongst themselves. The whisper number was 195, so they came in under that whisper number. And from my understanding, they had mixed forward guidance, but from the actual businesses, Cloud beat, YouTube beat, and ad growth, their ad business beat as well. So, I'm not seeing any kind of worries about the AI build out here. Google, they're well capitalized. They've got money to blow on this. All right, Texas Instruments. This is it's not on my watch list, but they did beat both top and bottom line. Semiconductor companies. So I was taking a look at this just because I'm trying to get a feel for what the semiconductor industry is doing. All right, we got Veritiv Holdings. So Veritiv Holdings is down 15% since they reported, but they did beat both top and bottom line. The earnings came in about 8.1% higher than expected, and they also they raised their earnings per share, which was above consensus on their guidance, but the revenue was a little bit below consensus. So a little bit mixed on the guidance, but just the Veritiv has just been blowing it out. I highly recommend typing in the ticker symbol VRT into Google and reading about their earnings growth, because it was quite strong. And this company is basically, they do a lot of hardware, software, analytics, products and services for the data center. For the data center industry. So this is telling me that the AI build out is alive and well. There's nothing to be worried about right now. And we'll see how NVIDIA's earnings come in. Amcor Group. So Amcor, this is one of the kind of electrical industrials. They do a lot of electrical, mechanical construction facilities for anything related to electrical and mechanical systems for both residential and non-residential. They beat on revenue 30.6%, and then their earnings surprise, they had a 42% earnings surprise, and they had an absolute massive raise on the quarter. So Amcor is going to be something that I'm following pretty closely here in the next coming days. Deckers just reported, I believe, this evening, and Deckers, they had a 22% earnings surprise, so that's pretty good on their earnings. But the revenue was just a 2.5% surprise. And let's see, did I record? Yeah, they did raise their guidance here for Deckers. And then the last one we have is Comfort Systems. They are the industrial air conditioner maker. Their earnings, they reported earnings of $3.74, 20% surprise there, 9% surprise on revenue. I don't think I have a guidance here. Yeah, there's no guidance that I can see from Earnings Whispers, but you know, they're part of this AI trade. So we'll go over and take a look at these actual stocks that are on the elite watch list. So first up, we're going to take a look at this long-term monthly RSI. Like I said, Sprouts Farmers Market. This stock has been phenomenal. The market's selling off. This stock isn't selling off. It's moving averages. Its 10-day and its 20-day are moving sideways. They've come up to the stock. The stock has not come down to the average. Very, very bullish. I'm still, as long as they report another great earning, I'm pretty bullish on this one. We've got GoDaddy here. They haven't reporting earnings yet, but you can see on this long-term basis, this monthly RSI, if you look over here on this weekly chart, you can see just how strong this is. I mean, this thing is just on an absolute tear, and this is related to the data center build out here. All right, we've got Iron Mountain. This is like you could say it's like a data center REIT. It's kind of what the stock is from my understanding. Once again, just been on fire here, sitting just above this 20-day moving average. And then we've got NVIDIA on this long-term performance as well. So these are some of the, these long-term leaders here that we're looking at. And now I'm actually going to flip this over to the daily RSI, so we can see just exactly what has not sold off, during this market correction. So this is CBOE Global Markets. CBOE is the Chicago Board of Options Exchange. So this is where options are typically traded at the CBOE, and this is the parent company. They're doing very well. Another one that's doing very well is the Intercontinental Exchange. So this is another like stock financial exchange. And as you can see here, all-time highs, refusing to break or budge below this 10-day moving average. The 10-day moving average is coming up. The 20-day moving average is coming up. The markets are selling off, but this is not budging. So this is signaling to me leadership, and this will be leadership in the next bull run once the NASDAQ and the SPY turn higher and start becoming bullish again. And then the third leader on here, D.R. Horton, home builder. Shortage of homes being built since the 2008 financial crisis, overbuilding of homes in the country. Home builders pulled back. Since then, millennials have come into their own. They're having families. They need family starter homes. They don't want to buy these old boomer homes. So there is a new housing shortage in the country, and D.R. Horton's just went on an absolute tear with that. Garmin, like I said, one of the leaders here, just made new all-time. Actually, no, this is not a new all-time high. It's a recent high. The all-time high was actually made here back in 2021. But still, great looking chart. It's not selling off of the broader market, sitting above this rising 10-day and 20-day moving average here. We've got ServiceNow. So they did report. ServiceNow, new all-time high that you can see it broke out here. Kind of got a little range bound. It's, the last, I'd say, since 2019, we had some good growth here all the way up until about 2021. And then since 2021, this stock has been pretty sideways. But this right here, I mean, it looks like it's trying to break out, move higher. ServiceNow, they are one of the big software players for business services. So anything related to automation inside your business that you're trying to do, ServiceNow, they've been around for a while. This is their bread and butter. They should be one of the first companies to really be able to capitalize off of the the AI trend. They should be one of the first businesses to really capitalize on that. So that's about all I got, really. You know, like I said, when it comes to the market, don't try to catch this falling knife. Let's just let the market play out, do what it's going to do. Once these stocks can get above a 5 day moving average here, that's when I would consider making some purchases. Some purchases. But until then, just stay patient. Last thing we're going to look at, because this is basically Nvidia. This is what's driving the market higher. All eyes on Nvidia. Like I said, once we can get above this 5 day moving average here, that's when you want to consider, maybe making some purchases. But until then, as long as we're below this declining 5 day moving average, just be patient, keep your powder dry, and be ready to buy some of these earnings winners. And that's all I got for you today.